Good afternoon, everybody. Welcome to the Misfit Happy Hour. I am your host slash co-host, Ronchero, and I'm joined today by our other host slash co-host, Spencer Riegle, down in San Juan, Puerto Rico. Spencer, where are you at? Are you at your apartment right now?
Yes, this is the apartment. I haven't left here in 3 days, unfortunately. I've gone to the gym though. I've gone to the gym, brushed my teeth, taken a couple showers. I'm taking care of myself.
I see your bag of whey protein in the background, so good to know you're getting your nutrition.
Oh yeah, definitely. 75% of my diet over the last 72 hours.
Has it? Have you just been like just making shakes and drinking that for the last 72 hours?
Definitely. A little bit of that, ordering some DoorDash. Anything that I don't really have to step away. So
What does one DoorDash in San Juan? What's a go-to?
oh man. I mean, you can get anything, right? So like a lot of people like Cabanos, which is taco spot, but I like this place called Martin's Barbecue. You can get some rice and beans and some chicken. So that's usually my go-to.
So like what's barbecue like there compared to barbecue that you would get back in the States, like Texas or someplace
Yeah.
like
So it's going to be completely different, right? Like, so the way that the meat's cooked, it's a little bit more, it's honestly, it's more just the seasoning, right? So like down south, you have more of that in some areas, that Cajun flavor. Here, it's just a little bit more of like salt, just an interesting kind of dynamic, but it's really good. So
do they like slow cook over hardwood and stuff like that? Or
I have not actually been to the place. I should probably go.
like, I don't know. I have no idea. I just order and it tastes good. Shows up at my door in 15, 20 minutes.
Yep, definitely.
All
It's
right.
always
Well,
reliable. So
we're obviously I wanted to talk to you prior to this meltdown, but I also wanted to talk to you especially today because the last 3 days in crypto have been insanity. And now you've got the market, the S&P 500 closing at what, 374.13. So over the last few days, you had this move from the lows, which we kind of were looking for a while ago. We kind of had a 50% retrace from that from the pandemic low, which was like at 349.5. We got that area and then it bounced all the way back up to what, like 400, 390.
so yep.
And then obviously it's cooled off, and it's cooled off in front of what many traders and investors are saying is a very important number in the CPI report tomorrow. And the CPI report is going to come out, the market's going to do what it's going to do, right? And then it won't be the important number anymore until the next time it's the most important number. So it's all relative. And I kind of think that when traders get all wound up and riled up about it is when it leads to mistakes. But what I can't reconcile, and maybe you can help explain to me in layman's terms, or as I like to say, explain it to me as if I were a golden retriever.
Yep.
Exactly what happened in crypto? Why are we here? How did this go down?
I think it's a mixture of a lot of things, right? So crypto has been very, very low vol for quite some time now, right? So there was a period where I think Bitcoin last week was trading 34 realized vol, which is like insane for Bitcoin. Bumped up off the NFP number, right? So a little bit more volatility came into the space off of that. But then last week there started to be rumors, right? And rumors that Alameda didn't have really a good balance sheet. And Alameda, for those that don't know, is one of the biggest market makers in the crypto space, right? So if there's rumors that they're going to be insolvent, that's almost like a citadel going down in traditional equities, right?
Yikes.
Who's
Okay.
going to
Yep.
fill that void? And if you're looking at the vol regime, you're going to be like, well, if there's not all this liquidity to kind of compress markets and help make these markets, we're looking at somewhat of a catastrophic event, right? So over the weekend, there was a hit piece, a CoinDesk report, and then a couple of reports that showed Alameda's balance sheet. And 25% of it was in FTX's native token, which is relatively illiquid. They had 3.66 billion in FTT. If you go look at the FTT market, if they would market sell it, it would probably dump 50%. Knowing that they're also probably market makers at the same time of this token, it's really hard to say where that net asset value is at, right?
Yikes.
So honestly, it was surprising it took the market long enough to really get nervous about this, right? This came out on November 2nd. And then Binance's CEO comes out and says that he's going to dump all of his FTT, right? He's no longer supporting FTX because they went behind their back and lobbied against the industry and all of this politics. And basically from a trader's perspective, it's like, okay, or an investor's perspective, it's like, okay, two of the biggest exchanges in the world right now are basically going to war. And so if you look at Binance CEO's Twitter, he confirms that he moves over 580 million FTT. Knowing that Alameda also has 3.6 billion that they're going to have to sell if he market sells. Not only that, Alameda has leverage against this FTT, and it's all just spun up, right, into this debt loop that we've seen it too many times that the market just started to get scared, right? So they started market selling. And then SBF, which is the CEO of FTX, came out and made a claim that, hey, we're going to be solvent. We're going to be solvent. And then you wake up one morning, I think 11/8, and FTX stops withdrawals. Right. And so everybody's like, well, I thought you said that we were going to be safe. I thought customer deposits were good. We later find out that there was a $6 billion withdrawal, right? They went through $6 billion of withdrawals in a day, right? And so no firm is going to have that amount of liquid cash on hand, right? And so they were looking to shore up short-term cash. And then it was like rumors that they were going around, shopping around, looking to sell equity to shore up some of this cash. And then midday, it came out that Binance was going to acquire FTX, which is insane, right? Like in the matter of 3 days, Binance's biggest competitor completely got wiped out. And now they're coming in to buy them and basically own a majority of the global market share on the exchange side.
Wow.
Right. And so then the market started to realize, you know what, if Binance comes in and buys FTX, what is the actual value of FTT, right? Like if FTX ceases to exist, FTT also ceases to exist because the only real reason for owning this token is to get better rebates and commissions on FTX.
Okay.
Right. And so Binance has no incentive to bring over FTT. They want everything to be in BNB, which is their native commission rebate token, and for their chain as well. So immediately the market sells off on this event. And now the market's starting to be concerned about Alameda. And then Alameda's intertwined with some of the biggest VCs in the space. They even go back to Jane Street. They go back to Two Sigma. They go back to all these well-known Wall Street firms. And that's basically where we spiral out of control.
So how far does it spread? Do you have any idea how far it can spread?
That's the biggest question, right? A lot of this stuff is to be determined, but you can go and look at FTX's last raise. So they just had a Series C and they raised 400 million at a $32 billion valuation. Bloomberg just came out with an article that valued them at $1 today.
Ouch.
Right. Some of the investors in that Series C were like, I think it was Ontario's Teacher Pension Fund,
Oh no.
Tiger Global, right, which is already having a horrendous year.
Yeah.
SoftBank, I think Vision 2 Fund. and I believe there was Paradigm. There was also there's just a couple other ones. If you go into the Series A, I
Mhm.
believe on the FTX US side, there's Multicoin. There's all these big names
Yeah.
that are invested in basically global infrastructure of the crypto space,
Mhm.
as well as startups, as well as funding payrolls, and they're getting backing from who, you know? So it really is, it's unknown right now, but it has the potential to really spread.
So, I mean, obviously it's all just opinion and it doesn't mean anything until the trading actually happens and there's follow through, et cetera. What is your mindset right now? Is there anything else that can add to just the capitulation? You've got a big CPI number coming out tomorrow. Do any of those other external factors lean on what's already looking like a chain reaction?
Yeah, that definitely isn't going to help, right? But oftentimes into events, right, the market's going to price in that risk prior, right?
Mhm.
So if we're going to see some of that selling, we'll probably see it now. And then on the number, it it'll be a reaction, right, based on the algos. And if equities sell off, then of course I don't think crypto is going to be bid at any point in time in the near future.
Mhm.
Um, so I do think that it's not looking good right now. I don't really see bouncing back after something as catastrophic as this to be a good bet. I think it's going to take time, digestion. No investor is really going to step in and say and claim a bottom, right? It's very
Yes.
hard to see where this bottom is. And a great example that I like to think about and try to keep it very simple is FTX stepped in at the bottom previously, saved Voyager. They went in to look and buy equity in all these distressed companies. So BlockFi, all these companies. Now, if FTX is blowing up at the exact same price that they saved it at, why should the market be? Why should the market be pricing at the exact same price? We should be much lower.
So is anything more stable? For example, if I mean the average, like I consider myself very novice and a layman when it comes to looking at crypto. Is that an opportunity for me to look at something like Bitcoin or Ethereum and say that's more of a stable type of asset? And if this, bleeds itself out, do I have an opportunity longer term with, let's say, a Bitcoin or an Ethereum? I mean, there's really no quote unquote fundamentals to crypto, right? So is it even a worthwhile asset class at this point, or does it all get dumped and people move on and it just becomes a shell of what it is never to return? Like, what's your thought on that?
I think that's a very easy narrative that everybody loves to say when crypto kind of goes through these cycles, right?
Mm-hmm.
And so I think these prices are more interesting than they were before a major player blow up. I think it's going to take time, but the appeal to crypto has always been the same, right? The asymmetrical upside. So while prices do come down extremely and are extremely volatile and do come down a lot, oftentimes, the upside is so big that not playing still presents that risk opportunity, right? And so whether that's like 5% of total net worth of an individual, a 400% return on 5% is still a decent return for a year on total net worth.
All right. So you've been through my course. You've been through Trading the Post. You know a little bit more about technicals at this point. Are you looking at any of that stuff? Are you trying to look at, hey, maybe I catch some Bitcoin or maybe I catch some Ethereum from like a long-term perspective? And are you just looking at it from, I need technicals to be lined up for me to consider it? Or how are you approaching the space right now, other than just your day to day? Are you looking for a longer term opportunity?
Absolutely. So last week, I was texting some friends and we were just basically going through scenarios, right? Let's say Alameda does blow up. Let's say FTX does blow up, right? That
Okay.
they have basically been the cheerleader for Solana. And the only reason most people have kind of owned Solana. So as soon as they blow up and are forced to sell their Solana, the market is going to price that initially extremely bearish. Now it's time to really go in there and look, all right, talk to some Solana developers. Are they actually building out what they say they want to do? Is this a long-term project? Is there actual fundamental technology that's going to be backed up with some token fundamentals as well, right? I say token fundamentals because you don't want a token that's just going to inflate 100% every single year. Somebody has to soak up that supply. And so I'm looking at everything, right? Bitcoin, Ethereum, Solana. I'm looking at even some of the new coins that are coming out, some of the newer ideas. But it's going to take time. So I think this is a great time to apply some of those ideas and strategies that that you use and really trade around and build free positions, because worst case scenario, you're wrong. Best case scenario, you're up 100x, 10x, like multiple people were last year.
Okay. Is the space, I think most traders, me included, look at the space and think, well, if I want to trade it, really my only opportunity is just to trade the coin. Are there options that you can trade? Are there leaps available for you to trade? And can you play weeklies against any kind of a leap play?
Yes. So the options market's a little bit different than traditional space. The spreads are a little wider. So liquidity is less, but something that's cool is they'll give you leverage on some of the short side, so you can delta hedge against it. So there's a little different fundamentals that you can use in there.
Okay.
But it still does present some of the same opportunities. Unfortunately for US citizens, the opportunity was FTX derivatives, and liquidity there is quite light. So that's a tough one right now. I wouldn't kind of look into that area. Another venue is CMEs, right? CMEs are incredibly regulated. They've been around for a long time. The unfortunate part about CMEs is there's high margin requirements for trading crypto. So
how high? What are those requirements?
I believe when I was looking at some of the bigger contracts, and they have the big boys, they have the micros, and now the nanos. And so that's going to be 5 to 1 with coins, 1/10 a coin, and then 1/100th of a coin. And I think on the big ones, the 5 to 10, they'll give you, I believe it's, or 5 to 1, they'll give you 2x leverage on that. So at 20K, margin requirement was like 43,000 for one contract, and that'll give you exposure to 5 Bitcoin.
Okay. And you don't have to worry about any other type of margin requirements? Does it trade differently? How, like, what are my concerns if I'm using leverage like that? Obviously, besides it blowing up, but do I have to worry about calls and the rest of that kind of stuff, or like, how's that work?
Yeah, so there's the futures product, and then there's the options on the futures. One big concern when trading the CMEs is they're closed on the weekends, right? So close at 5 p.m. I believe on Friday, and then open up around 6 p.m. same time. So there is gaps on the weekend that often the rest of the world kind of trades against, because they have the access to trade against those.
I see. Okay.
So CME traders do kind of get pinned in the corner sometimes.
Yep. That does not sound like an advantage to anybody that's
definitely not.
So I mean, if I listen to what you're just saying, like from a US based perspective, like what is there to lure me into that space other than to say, hey, it's really gotten the crap knocked out of it, and this might be an opportunity to start looking around? Because if I look at it, if I just look at a chart of Bitcoin, and I look left on well, that's just it, right? Like the last time we were here was 2020, and prior to that goes all the way back to 2017. That's kind of a problem on a chart, right? That's not offering much hope when it's continuing to just crater.
Yeah. That's a great question. The space, and the reason I'm interested is it provides a lot of volatility. It's a new space, and as some of the bigger players gets pushed out, there's more alpha, right? Because they were absorbing a lot of the alpha with faster machines, further capital, all these kind of things. So for the short term, there's going to be a lot more opportunities. And then the volatility is, of course, a trader's dream. It doesn't matter if we're trading air which we're finding out some of these coins actually are air. Um, as long as air goes up and down, we can trade it, right? And so I would say there's other solutions, but I would be careful, right? The best way to approach this, if you're going the non-KYC route, which definitely exists, and I'm not saying this that you should, but oftentimes a lot of crypto traders do this. Put a small amount of capital over there, trade it, kind of stack it up a bit, and then move it off. And that's kind of the best way to really trade in these things.
I mean, it's to me, again, it's just like I spent so much time learning my sector of the trading world that just I have not been able to wrap my arms or my head around that space. So, and I'm not doing an egregious pump for you and your course, but I'm doing a pump for your course because I
Sure.
obviously need to take it to know what's going on. But Matt, if you have an opportunity, can you post a link to Spencer and Lucci's course on the on that space, on the crypto space, because that is, I clearly need to know more, and not even from a standpoint of I want to come in and trade it, but just to understand how that impacts the broad market, because it seems to me that there is, if that much money is being evaporated in that space, it is going to have an impact on the broader market. Do you agree with that, or is that fictional?
100%. I mean, just look from the simple fact that Tom Brady was an investor in FTX, right? Like this spills over a lot further than people think. And of course, Tom Brady has a lot of capital, but this is kind of his first experience into the space, and he's getting burned. A lot of people are getting burned, and it looks very bad on the industry.
Mm-hmm.
So,
with that being said, does is the fire already burning? Is this a forest fire that can't really be put out until it reaches a natural area geographically where it just stopped, doesn't have anything left to burn? Or what's your thought on where this goes?
I'm not in any rush. I think this is a buyer's market. And in buyer's market, time is always on your side.
Okay.
So I thought there was going to be another blow up. I had no idea it was going to be FTX and Alameda. I thought it would have been somebody that was a little less capitalized from the public's perception. But the fact that there's allegations that they're doing some of the same things that 3AC was doing, it looks like there's a lot of practices that need to be changed from a broker dealer side of things and rethought about from an industry side. So.
The traders that are involved in this space that have built these exchanges, what kind of backgrounds did they come from? Are these people who were formerly traders? Were they investment bankers? Did some of them have pedigrees, or are these guys that just came out of nowhere and decided that they could do it better than Wall Street? Like, how did this get to where we're at?
Sure. So I believe the background of Alameda, they're coming from Jane Street, right? So a couple Jane Street traders, Sam in particular, and then I believe Caroline who is the current acting CEO. I believe they were both Jane Street. They have ex-Google developers. I heard somewhere that it was Two Sigma as well. So pretty reputable firms in the space. So the fact that was the public perception that they're geniuses, their claim to fame was on this arbitrage that was back in 2017, where they would buy, I believe, US Bitcoin and then sell South Korean Bitcoin for a 20% arbitrage. And they were doing that multiple times a day, and were making incredible amounts of money. I was reading an article about Alameda where they were basically charging basis points on extreme amounts of volume per day and netting around 3 to 4 million. So it was, from the outside looking in, it was very high tech. It was reputable from the backgrounds, and they were applying strategies that sounded quite sound.
Was there any leadership or guidance anywhere along the way from traders who had lived through bear markets? Because for the last 10 years, I mean, there's been some blips.
Yep.
But we haven't seen a bear market in a decade, and I'm guessing a lot of those people have never seen it and are probably shitting their pants right now.
Well, bear markets in crypto happen almost every other year, it feels like, right? So
Okay.
so if they started their firm in 2017, which their first seed round was in 2017, then they definitely went through 2018, 2019, which was brutal. That was when I think Bitcoin priced all the way up 19,900s,
Mhm.
and then found a bottom in the 3,000s. So that was a significant bear market. I remember watching interviews where they were trading actively during that period in time. And so bear markets in crypto are not abnormal, whereas the traditional space has been, I don't even know if I've seen one to the point where I remember well enough, right? Like I saw it from the outside looking in, being in Michigan and everything blowing up around me, but I couldn't comprehend what that actually meant. So
So where do you think these guys go from here? What do you think is it just a band-aid on a sucking chest wound? What do you think these guys do to fix the problem here?
yeah, so the what is it? Binance just came out right before the bell and they walked away from the deal. So it's looking quite bleak on the FTX.com side of things. FTX US is going to operate as the same from their tweets earlier. But the US is doing a probe into mismanagement of customer funds and lending. So it's really hard to say. Honestly, I think it's going to be a developing story for the next month. And if there's legal action that's taken, it's gonna be a process.
So I guess in between that, you really can't, I mean, to me, just at first glance, knee-jerk reaction is, okay, somebody missed something critical, and it may not be just one person. It may be a system, an organization, how they built it, whatever it is. To me, it sounds like, at least right here, like why would I want to get involved here? Why wouldn't I wait until there are bluer skies and start looking to buy on the way up, as opposed to trying to say, okay, this is the worst of it, I'm gonna buy here?
Yeah, from the buy side, no need to really step in. I guess kind of dollar cost averaging has always kind of made sense.
Yeah.
But even then, I'm not doing that now. I've been kind of waiting for the last 6 months for lower prices in Ether, and I think this is an event that's going to help with that. Ether in particular, because I'm a big fan of some of the things that are being built on Ethereum, as well as some of the new changes within the protocol. And it seems to be somewhat of a safer approach to crypto, I would say. It's more of a blue chip. But at the same time, what are we looking at, right? Like you kind of expressed it in the beginning of this. It's what's the intrinsic value of this? And that I think is yet to be determined. I don't want to write it off as there is no intrinsic value, because I think that is kind of mitigating the opportunity that crypto kind of presents.
So what are you going to do?
What am I going to do?
What are you buying?
Yeah, so
What are you shorting? What are you doing right now?
so I have a bunch of options that are basically out. I wound down most of my position today. Um, I was actually short a bunch of options, both sides, right? So I wasn't prepared for an Alameda blow up. I
Okay.
was thinking more of a CPI and then kind of working around normal ranges. I wasn't expecting a 30% drop in Ethereum. So I had short puts that I had to aggressively delta hedge. I think from the time I sold those, they're up roughly 80x. They might be up 100x now.
So
So that's
describe what you did when you said you delta hedged. What did you do?
yeah. So I sold a bunch of calls, and then I was smaller on the put side, right? And so I was just looking to kind of trade that IV back in after the CPI. And So as kind of this progressed, IV popped and those contracts quickly went through the roof, right? And
Mhm.
so
Yeah.
slowly I was selling spot against it, and just shorting futures against it, right? So I got to a point where, even on a massive pull like this, I think the week's only down 1%, which
That's
is
not bad.
that's
So
a win.
what's keeping you calm when it looks like the cheese is sliding off the cracker?
Um, when volatility is present, there's massive opportunities, right? So not only if you're short volatility, yes, you're scared.
Mhm.
But if you know how to operate in between, right? So looking at the position was relatively small on the put side. So it's like, okay, if I think the market's going to dump, let's over delta to the short side. And I would just sell more futures relative to the options and start to really take a position like that. The reason that I'm not just covering the options, which should be like a good question, is in crypto, they're not always as liquid.
Okay.
And especially on that IV pop, it didn't really make sense to take that realized loss.
Mhm.
Um, so I was thinking of other ways to kind of do that. So
So are you looking towards tomorrow's number as more volatility? Are you going to play any IV into the number, or what's your setup right now look like?
yeah, so right now, I'm all hedged here. I have short call risk. So if things really turn around, and I mean like a 50% pop in the next 24 hours,
Mhm.
um, I'm going to be at gamma risk, which means I'm going to really have to hedge that with buying shorter dated calls. But other than that, I'm in a good position here. So I'm doing nothing. I'm not even buying puts.
Are you going to get any sleep going into the CPI number, or do you have to babysit this overnight?
Yesterday was a bunch of babysitting.
Yeah.
Yesterday was babysitting. So intermittent naps throughout the day yesterday. Today I'm in a much better place. There's no need to really come out here and swing, because the risk I see is, yes, we're going down, but what if somebody comes to a deal, right?
Yeah.
There is that upside risk. So I don't need to step in front of that. And I don't really need to take outsized risk in this volatility right now. If I can kind of survive, those gains will be made back next week. So,
So from like a long-term
or the
perspective, this is just not the right place to even consider, jumping in or applying a trading the post type of strategy, is it? I mean, nothing looks like that right now. I mean, just technically on everything, nothing is giving an opportunity for that type of a setup, at least not now.
I say wait for it to settle, right? One of the reasons for is if you're buying the leaps, they're going to be priced up in IV. So you're going to
Right.
be overpaying
Yeah.
for that. So the
Yep.
only way to compensate is sell some of those shorter dated ones.
Okay.
Um, but why overpay? Why kind of put your will onto the market? The market's going to do what it does.
Yep.
So, um, and I've had a lot of these conversations, and I like to think about this a lot, is if you miss a 30% pop in crypto, it's not the end of the world, because
Right.
we're going for 400% returns. We're going for 1,000% returns,
Yep.
right?
Yep.
So God forbid you miss a 30% pop.
Yeah.
As long as you have that confidence kind of solidified, you're good.
Okay. All right. So then, I mean, to me, I kind of align myself in the same boat. I mean, I just look broadly at the market, and it, we need that number tomorrow at a minimum, just to see what the reaction is. And then maybe at some point you start to see technical start to change. Like for me, I'd be happy if the S&P 500 and the broad market just decided that it was going to trade sideways for a while. Like that would be an improvement in my view, right? Like if there was constructive sideways, we're finding price, we're finding valuation, all of the other BS that gets thrown around. If that happens, it makes me more apt to look at long side long term. But I need technicals, and you need some kind of change in policy. People are all worked up about the election. People have all these other scenarios of the what ifs, and how is it going to play out. And I don't like to participate in that because it's, first of all, it's a brain drain. And ultimately at the end of it, you just don't know what's going to happen, right? Like
Right.
it's, the butterfly flapping its wings off of the coast of Africa, turning into a freaking Cat 5 hurricane over here, right? You don't have any idea.
Yep.
So, I mean, I look at the broad market, and then I look at crypto, and I can't make any kind of a correlation between the two. To me, and that's how I look at it, because I don't know crypto. I'm freaking old dog looking at it, and I'm like, doesn't make any sense. I can't hold it. I can't touch it. I don't get it.
Right.
I'm just not gonna mess with it.
How how has your trading changed over the last year with all the volatility and all of the uncertainty?
So just generally speaking, we have mostly been looking for um, pops or rises up into areas of, whether it be, I'm not a big fan of trend lines. What I like are, I like moving averages to look for change in behavior. And we use things like Fibonacci just to measure, just to give us ideas of where we might see change. Not to say this is the number and this is where we trade, but to say, hey, based on this stuff, we like to use like anchored volume weighted average pricing, right? Like if you know Brian
Right.
Shannon and you follow him, like all of these things kind of apply. And if you look at it broadly, it doesn't take much of a trained eye to look at a chart and say, listen, for the last 10 years, when the market dipped, it was appropriate to buy because it rested on those areas, like the 50 or the 200. Those were spots where behavior changed and the downside stopped and kept bouncing back up. Now it's the opposite. So we've been playing that way, and
Gotcha.
we've tried a couple of times to get long something long term, and it hasn't worked. But because of the way we trade, we've been able to protect the leap and work our way out of those trades at either break even or small loss or small gain. So we continue to look for and try in spots, but broadly we look at it and say, we're just looking at pops as opportunities to short again. We haven't had anything other than that really to play. And it doesn't matter what theories or, anything else, like what phase of the moon we're in, or, any of that stuff, right? Like
I
everybody
heard we're
comes
in a
up with
new one, by the way.
I mean, and we have a trader in our room who actually uses that sometimes, and we all kind of get a chuckle out of it. But it's not the craziest thing that I've seen out there. But all of these things, it's interesting when they line up in areas that you see either support or resistance. Some of these other things also show up. So, for example, if you look at the SPY on a chart right now, like you're right at a confluence of moving averages. Is it a coincidence that the price is lining up here in front of a large economic number? If you think it is, you're missing what's actually happening, right?
Right.
I mean, it's not happenstance that it lines up that way. They line up like that for a reason, because they're looking for advantage to one side or the other. So they're putting it at a place where they can call it equilibrium until news comes out, right?
Right.
Which
All
makes
right.
it a coin toss. If you take a trade today in front of the number, you are tossing a coin. I would rather wait
Yeah.
for reaction and adjust.
Yep. Agreed. Agreed. So you traded through the financial crisis, correct?
Yes.
This to me, listen, 3AC felt like a significant event. This seems like it's much larger, right? This is a fundamental pillar of the crypto ecosystem, right?
That is just scary.
If you could go back in time, how would you trade it? How would you trade it knowing what you know now, and the way you trade now?
You mean trading the financial crisis?
Yeah, let's call this Bank of America, right? And we'll put in a little add in that Warren Buffett's about to buy out, so that he's going to backstop. This isn't Bear Stearns, this is Bank of America.
I mean, if I could go back in time, I mean, so first of all, at that time, I was in a spot in my life where my life had kind of been turned upside down. So I was out of any positions and I was in cash when that happened. And
Right.
that was really fortunate for me, right? It was really fortunate because that's where I was able to get back involved again. But I didn't get back involved again at like, the Mark Haynes bottom on CNBC. Like it wasn't like that. It was okay, let it start to recover and then look at what can I do on a longer term basis so I don't have to sit there day after day monitoring the ups and downs, right? I'm looking at it for how can I do this and relax and give it enough time to work. And I didn't do it until things started to recover and bounce back. I don't try to pick tops. I don't try to pick bottoms. I try to pick areas where it looks like trend is going to find a direction and have it be sustained. So I don't know that I would have traded it any differently other than I got lucky when I was in cash because of an unfortunate time in my life, right? So that worked to my advantage, and sometimes that's what it takes, right?
Right. And so going back and thinking about it, right, is like, this is going to take some time to sort out. There's a lot of pain here. There's a lot of distrust. There's a lot of just reputations that need to be adjusted and changed. And so it's going to take some time for any buy side pressure to likely come back into the space. But I would agree with you similarly to the fact that waiting for this thing to turn around would present opportunities, right? So in that lull period where there's lack of buy side, but there's also no sellers because everybody that sold is already probably out. We're just in this floor area. That probably presents a decent opportunity where you can sell some options against. And one thing to think about is these options settle in coin if you want them to. And when I say that, that means that if you sell some ETH calls, they'll settle in ETH. So you can just collect some ETH, you can collect some Bitcoin. Now, if you want to adjust that back to US dollars, you can immediately sell that. But is that, where do you see the opportunities in doing that and applying trading the post to an asset, let's say that has the potential to go another 10x after the dust settles?
I mean, you know how I apply it. I mean, I would be looking to, quarter position my way into something, and where I like to look at in the money on those leaps, and then I would just have to let it play out either to write against it on pops and try and get myself to a point to where those leaps that I've bought are paid for, right?
Right.
So it's a I don't know, it's always a tenuous situation when you're at levels like this.
Right.
I don't like sticking my hand in a lawnmower that's flipped over that's still running. You know what I mean? I'm just like,
Yeah, I think
no.
that'd be a good idea.
I'm just not going to do that.
Right. Right.
So I like the prospect of long term on it, but I guess my point is I just don't understand it well enough to look at it and say I'm ready to jump in there unless I'm, following or working with somebody like you that says, hey, this is a good time. But if I look at a chart, at Bitcoin and you say to me, Ronchero, this is a place where you want to, do you want to look at buying some long term? I'm going to be like, I don't think so.
Yeah, no, now is not the time.
And I can't grasp onto anything because normally if I look at something long term, it's not just the technicals. It's okay. What's the turnaround story? What's the fundamental story here? Are there players that are involved? Like, take a look at how much of a train wreck Intel is right now, right?
Oh yeah. Oh yeah.
They want to onshore chips, which is great. I think it's great for the industry. I think it's great to get some of that, those tier 1, those tier 2 chips out of potentially harm's way from autocratic governments, et cetera. But in the meantime, man, are they just taking a beating? And until you see signs of improvement from a fundamental standpoint and insiders buying and institutions getting back on board and a couple of quarters of good earnings and good guides and good reports, how can you do it?
Yeah, right.
I can't see any justification to jump back in unless you get a mix of those things. So I have no clue how to do it when it comes to crypto, other than to say this, and I don't mind liquidations. I don't mind when stuff gets blown out like this. It's actually healthy in a lot of ways for these types of things to happen. I don't know who the people are. I don't wish them ill will. If they were cheating or they didn't manage things appropriately, they're getting what the market thinks they deserve, right? Which is a solid whooping, right? And that happens. That's part of the business that we're in. So I don't look at it as a negative. I look at it as, okay, we're blowing through a bunch of crap here. What happens after it settles? Is it still viable? And that's why I would come to you and I'd be like, what the hell should I do here, Spencer? Like,
yeah, I think
I mean?
waiting and seeing is the best kind of approach right now. The volatility is amazing. I mean, we just dropped, I think, 10% in the last since we've been talking. So
do you look at a drop in volatility and then say that might be an opportunity for me to short-term trade?
So these, I mean, similarly with like most markets, right? When VIX is blowing up to the upside, right? Like
Yep.
one thing that you need to be concerned about is any firm that's short the VIX, which a lot of firms are. And then once those players are blown out, then oftentimes there's that VIX rollover, which presents for great time to sell options for one.
Yes, for sure.
And usually presents a floor from what I've seen over the last year. Usually we get those VIX explosions and then VIX goes as high as it can go.
Yep.
And then fear is already basically baked in. And then the market makers or basically any trader will come in and really sell those overpriced options. You would think that we're there, but it's still continuing to sell. So this could be one of those further black swan events where it outperforms to the upside from what we've seen kind of historically.
Yep.
So
And how much exposure do you think there is on the VIX? How short do you think institutions are VIX, and how much of a squeeze do you think you could see there?
So there's not really like a VIX product. The closest thing is Derbit. I heard is going to be rolling out some index futures. So that
Okay.
I heard, but I guess being short Vega in terms of options
Mhm.
could be where you kind of get squeezed out. That probably already happens for the most part, because we're looking at what is it? The 9-hour at the monies are 260 vol, 260%.
Okay. And
Which is
what's a normal, what is a normal vol on those?
we were trading last week around 60 to 80.
Okay.
It's
So
exploded.
are you going in there? Are you going in there and writing that? Are you selling that?
Not yet. Not
Okay.
yet, but I'm thinking about it. I sold I'm selling some of the wings on the call side because I'm thinking, okay, what's the easier trade? And I'll bet on that. So scrape some of that premium. As soon as yesterday after the close, we saw a fall roll off, right? So we were D-vol, which is Derbit's index. You can think about it as like VIX, right? Rolled off about 14 points, and I was selling around 10 to 20 deltas. They were cut in half in 15 minutes. So
Nice.
so those are opportunities that I'm seeing kind of out on the curve. But that comes with its own risk, right? And that scammer risk. So
Yeah. Okay.
it's
All right.
not an easy environment, I would say.
So along those lines, what are you doing to maintain your sanity? Are you overthinking a little bit too much?
No, honestly. So the week started off a little bit rough. Those positions went against. Hedged them up quite well. Got back to basically break even for the week and shutting it down. You know, people are losing $32 billion businesses this week. So to be down 1% it's a win in my book, right? I can go to sleep.
How were you hedged? I mean, when you were going into this, you didn't see it coming.
Yeah.
What was your prep ahead of time to say, okay, I go to sleep and I wake up and the world is ending. How do I fix this? I mean, is that how you always approach the trade to kind of keep your sanity when you're in the middle of a shitstorm like that?
Yeah, so normally these are times when I shine. So I'm actually there is some frustration on that point, right? Like
Mhm.
the Luna opportunity provided massive opportunity. This should have provided ways to double up your account. Um, but I was taking a different approach. So immediately once I sold those contracts, I knew that there was a risk. I sold them 15% under the market. So I was thinking, in a normal CPI, I'll have time
Uh-huh.
to kind of adjust around that.
Yep.
This news story picked up a lot faster. So I want to say I sold those contracts between $5. Immediately they went to $25. But spot really didn't move. So I said, you know what, let's start delta hedging this side of things. And so I would sell a little bit of spot against it. Um, and then as slowly as they were going into the money, I would sell a little bit more and more and more until that position was
Okay.
basically covered. I was also buying puts against it and doing some of those hedges.
How much pacing were you doing when that was going on?
Yeah, it was a lot of thinking. I mean, previously we on the Binance acquisition news, we popped 7% in, I think it was 15 minutes. And I was
Mhm.
short calls, right? So immediately you're getting gamma squeeze there. I wake up, you're getting gamma squeezed on the bottom side. It was chaos for a bit. And then settled in and went after it. So
Oh
uh,
man, were you in the office or did you do all this from your chair in your apartment?
oh, I've been listening to, what is it, like piano for a little bit and some house music, and I haven't left the apartment. So taking a few phone calls, hopped on a few meetings, but other than that, it's been whatever. I almost put on little Einsteins. What do they say? That makes you smarter. So anything to kind of balance out those emotions, of course.
Man, nice.
So
I mean, good job for, I mean, like you said, you didn't see it coming. It's hard, it's probably difficult to see coming. Those things, they do crop up out of nowhere, and all of a sudden people want to know, posthumously what happened and why couldn't we see it? And somebody somewhere is going to be like, oh, I saw that coming, and I told, that's Starbucks guy. So that's always the postmortem on that stuff. So it's good to hear that you already had a plan and that you've wiggled your way out of most of it. And it sounds like if you're only down 1% for the week, I mean, that is a win given just how much this is cratered. It's crazy.
yep,
It's crazy.
yep. And I think as price goes down, that P&L gets a little bit better. So um,
So
yeah,
what do you go ahead?
I mean, there's just a lot of opportunities right now. Um, I would say on a lot of different terms. I'm looking at Solana, and Solana was priced 27 earlier this week. Or no, maybe 24 earlier this week. I'm seeing some of these perpetual contracts at $8. The spot market's at $12, $13. So there's disparities between CFDs and spot markets. There's outright markets that are incredibly backwardated that that you can come in and basically arb off some of that free money. So there's free money around here. So free, I would say, and it's not really free, but
Relative terms, you have to
there's
recognize
safer
it.
trades.
Yeah, yeah.
There's safer trades.
That makes sense. All right. So what do you think tomorrow? CPI number. What do you think happens?
Um, I mean, flip a coin at this point. I do think equities, they might start to follow suit in terms of risk off. So
I saw some yeah, I agree with you. My thought is that it almost doesn't matter what the number is. I still think we're coming in. So
yeah,
um I don't know what the number is going to be, or nor do I necessarily care. I want to just make
right.
sure that I'm on the I'm out of the way, and then I can latch on to whatever direction we're going to go. I would prefer this to all just start to settle down, but I don't see how the Fed can change policy. They've told us they're not changing policy. I don't know why everybody's holding their breath, because I don't see anything changing until they get to where they want to be from a rate perspective. And I don't think they can accomplish what they want to set out until they're probably around 10%. That might be a
Yeah.
little too gloomy, but that kind of seems like that fits. So that means there's more room for them to continue on this path. And until they change, how can the market go higher? And I don't know if it applies to crypto as well, but it seems like it could, especially after what's happening here right now. It just seems like there's just room for more bloodletting.
I guess in the game of risk and reward, I don't know who's going to really step into this space, knowing that there's potential bombs everywhere now,
Yeah.
relative to the equities, right?
Yeah.
So I could see that. I think one thing that's quite constructive, more the macro side of things, is layoffs this week. So if it does get pretty bad, then the Fed's going to have to pivot, right? Like you can have millions of people out on the streets. That doesn't usually fare well.
Well, what I can't reconcile, and I guess it's probably sector specific, because if you start seeing tech losing workers like Meta, right, just
Right.
laid a bunch of people off, who else follows suit? And does it become an opportunity for, oh, well, they did it, we'll do it, just so that we can clear some space in the next couple of quarters, we catch our breath, and then maybe we get an opportunity to make our numbers again and then guide higher. And then if anybody's still hanging around again in 6 months or a year, maybe we hire some people back, right? Like
Right.
I know it's a really cynical thing to say, but if you're in the chair running a business, why wouldn't you look at it and say, oh, it's an opportunity for me from that standpoint, if I have some dead weight or I haven't been performing numbers wise to weather the storm, right? So does that impact the Fed's policy, or does the Fed just look at it and say, well, no, these are just companies that are putting people on the street temporarily or for now because they're looking to gain an edge through the shitstorm. Like, again, it's really cynical, but I don't put it past corporations to do that.
Yeah. I mean, I guess their job is to make sure there is a seat 2 years from now. Right.
Yes.
So whatever that takes in their mind, is as brutal as that usually is, that's usually the business cycle.
Yeah.
So
Yeah. All right. Well, Spence, we've been at this for about an hour. I will let you get back to trying to get some sleep, shut your brain off for like a couple of hours.
I think I'm going to go to the gym. I think
That's
I'll
probably a good idea. That's a good idea.
get all this energy out there.
But thanks for coming on. This was, it was great to talk to you right now, because it's, such a entertaining time, not for you, for me, it's an entertaining time in crypto. So it's good to try and get a handle on it. And I appreciate the time and you explaining it.
Yeah, absolutely. It was a lot of fun. When things turn around, we should hop back on and see how we're going to play the
and
long
let me
side of
know,
this.
because if there's an opportunity for me to look at some stuff long term, I'm not opposed.
Okay, absolutely.
All right, Spence. Thanks, man.
All right, later.
All right, see ya.